Hey guys, welcome. Right, so let's see. What do we have today? Right, so I think long story short is if you maybe minimize this consolidation over the last 2 days. So we've got this push up. So obviously it looks like we're bearish consolidation. So I would like to see some sort of move down, maybe bounce in this area or set something up here. There's equal lows here, there's equal highs and equal highs up there. So I will be surprised if we're going to run up, and maybe we do that. We run up, we run down and consolidate further. But my perfect play would be for us to break through here to this area and then bounce to extend higher. Either way, let's give it some time here. Market just opened, so let's see if there's anything here. Some equal highs there. Let's just follow along with this. Okay, so everybody can hear me all right? Just let me know if you can't, or maybe just put a Y in the comment if you can hear me. Start marking out what we see. Okay, so let's do this for now. Fair value gap here. Just want to see if so the gap's closed for the opening range, which is fine. I haven't broken anything there. We invert this fair value gap right here. Good, thanks everyone. Okay, so everybody can hear as well. Equal lows 24, 20. I've got this 24 level here. There's 24, 7. So there's over here. So let's see. Okay, so I'm going to be patient with this one. So we haven't closed through this breaker structure yet. That's why I haven't taken any trades yet. So this is the high. If we break, so we keep pinning through here. So I don't know if that's what Pride intend to do. But let's give it some time, yeah. Da, 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 da. Sometimes people look at this and like, oh, missed the move. It's alright. Not to miss a move, but there's always something in a shift like this that sets up. So that's a IFVG, so it's not a fair value gap. So let's see something quick. Yeah, we'll have to keep an eye on it and see. Right, so now we're back in here. We haven't taken these lows, so that could be my only problem is there's no fair value gap, but this is now pinning into this 50%. So even if you take a short here, it's not going to be an A plus setup, but we did break structure here. That's a nice reaction there. I mean, this looks like a nice trade, but I don't know yet. So this is going to be the structural break we're looking for. Let's try a trade, yeah. Let's try a short here. Let's see. This is more like an anticipating trade. Stop loss will be there. I'm going to see a swing point form here and then, try to see price move lower. Okay, so there's a swing point. Don't want to see this well, taking out that swing point. What I was going to say is that I want to see a candle close above there. You can run liquidity there and then shifts lower. If we do this, if it stays like this and we break this structure here, that goes, my stop goes up there. Okay, let's see if we can do this. Okay, so we want to see it close below there now. we see a close above here, I'll just collapse the trade. But this is what we need to see. Price to go and close below the swing point here. Notice how quickly that spike was in there to either stop people out and trick people to the wrong direction, and then hopefully this should be a more aggressive black candle down. It's spinning there as well. It's obviously not the best situation. Could test there and pull back into the range. But if it closed there, I'm just going to take this trade off. Okay, I'm out of that trade. Okay, so the first presented fair value gap is this one here. Make this a purple one. Call this first fair value gap. Take this one out. So, okay, so now we're going through the upside here. Let me see, as a 15-minute was got like, right, I'm going to take all of this off just so we have a clear picture. We'll use that now. Okay, so we've got these equal highs up here. It's fine if you want to run those first and then come down or what have you. Right, so there's 1 minute left. I'm just always looking at that first 15-minute as well to see what the range is. So currently this range is broke structure here, ran liquidity there, and this could be a pullback in here somewhere if it wants to go long. But I think at this point, let's just wait. There's liquidity right there, and then we've got liquidity down here. Alright, so this is that first 15 minute, there's 50% there. So it's right there at the little order block there. The reason I marked this out is if we believe that price is going to go higher and it gives us some sort of a reversal here, if you take a trade here, you'll put your stop down here. If it reverses from here and it breaks this high, you'll put your stop there, you'll enter there and your target much higher. But I mean, you've got all these liquidity and this one up here. So let's see. Just bear in mind of this big consolidation that we're in. So I'll show this again. So there's equal highs up here. So this could run there to the top of that consolidation. Price could run up there, reverse and come back down to this side. Or price could continue consolidate. I just muted the audio there for a second because I had some background noise here. Should be fine now. Okay, let's look at this little area here, or even this first fair value gap. So this low here should be a protected low because of this break of structure right here. So if price comes down, we don't want to see it violate this low here. But we could run this liquidity and then boom, slice through this. Let's see if this line will hold price here. See our tiny fair value gap there, which was in discount from this protected low. That's your optimal entry. And now you've got this fair value gap here. So let's see if we want to inverse this. Let's make it orange. All right, so what am I looking for now? I'm looking to see if this little wick is going to be a swing point, and if we're going to bounce from here to close above that and inverse here, that would be a nice entry, and then see if we can trade it up to these equal highs. But I mean, we're busy breaking structure here now. Right, so structure's broken down here. That's a protected high. Maybe we get our fair value gap now here. And I'm actually going to leave this little fair value gap there, because if you got a fair value gap here and an inverse here, if we pull back here, it will most probably be in that area. It's right here. Okay, let's see if we can get a pullback into this little gap here. Only thing is, I don't know if we will get that pullback because we just inverse this first fair value gap. But let's see. I don't want to enter down here. Let's see if we break structure here. Come on, give us the pullback. Give us the pullback. Let's do some measuring here. Gosh. That's about 44. So 44.90 is about, yeah, okay. Right, see, this is right at that equal lows. So I want to enter here, but I want to get a better price because this is the target right here. There's the target. Entry stop above here where my entries actually are. So let's see if we can get a pull back here, even in this area here. Yes. Right, so now we're going to break down here. Actually going to put a sell order there. See if we can get this. Right, so I'm in this trade now. And of course, try to bring that one closer. Just want to see if I can get picked up here. Maybe a retest and then sell. The aim was to get in up here. Okay, so this, you want to see close below that. I'm actually gonna take this down there. I don't suggest we're gonna go there, but I'm gonna manage it and see how far we can manage it down. I mean, if it bounces here, then we'll see how it react down here. Okay, so there's a high there, but this candle now needs to close below this level here for us to put a stop there to protect. Otherwise, we could still spike in here. I'm in South Africa, so I mean I can use prop firms, but I can't take any payouts, so it makes no sense. There's too many rules around the South African market with the futures prop firms. The only prop firm I can really trade with is CFDs, and the most trusted one is probably the FTMO. Only difference with FTMO is you have to pass twice before you can do any payouts. I know they've got a one, whole bunch of other accounts, but too many rules. If you can get the capital together, then it's better to trade your own money. But yeah, I would like to trade prop firms in the futures space because it's cheap and it's an easy way to get hold of you know, cash, free cash. See if these are more expensive to take out prop accounts. Do I use to trade futures? Oh, okay, I'll just answer that. Do you think we're going to get this momentum down here? Look, if you're going to do a futures account, depends on your broker, what their costs are, and what their leverage are. I've always said maybe, I mean, I'm not here to tell you to go with $1,000 and try to make $1, but if you want to start, I don't know, futures, for me personally, to start with a futures account, if you can start with $10,000. Obviously, you can do smaller than that. The problem is with most people look at the smaller accounts. You can, if you really proper risk manage that, you can only make small amount of money, and most people want to make more money. So I think it's a personal preference, but you're gonna have to see which is a trusted broker with you, and then obviously look at their spreads, look at their leverage, and see how much money, if you have to risk a 0.5%, is that equivalent to what? Because sometimes what people do is they put say $1,000 in an account, and the bare minimum that you can risk on a trade, say it's 1 micro, is equivalent to like 10% of your equity. Then you can't do that, because that means you're risking 10% of your money every time you take a trade. Only take a few trades. You don't have to lose 10 trades to lose your money. You're only going to lose a few trades, and then you can't, because then you need to top up with more money. And I guess that's where the prop firm comes in. If you in the US and you've got the luxury of futures prop firms, it's not expensive to go and risk $40-50 to get like a 50K account. You just have to stick to the rules and try to take a payout. Take a payout and add that to your account. Try to double that account. And I know maybe people think, geez, double the account, that's a big ask. If you manage it properly, it's not a big ask. So yeah, funded, is it, there is a prop firm. I know someone who's actually trading it. I think it's top 1 trader or something like that. But they've got rules. They've got rules like you have to hold trades for 5 minutes. You can't close a trade within 5 minutes, then you get kicked off. I mean, at the end of the day, I don't want to take a trade and know if it runs there in 1 minute, I need to keep it, and I can't close it and take profit. Okay, so I didn't get picked up there. There we go. But now we need to see what this candle's going to do. Let's see. I want this candle to bounce from here to come lower. Close above there, then it's obviously a problem candle. Okay, let's see. Just put a stop there because for some reason I don't like what this candle's doing, yeah. But hopefully we get follow through down to the downside. Then I'll move my stop lower. Top step, I think top step, yeah, I need to go see, but I don't think top step or Apex do payouts to South Africans. One of the two, top step or Apex, I had an account. I requested a payout and then it was denied because of South African rules or something, and then it was my account was closed. So that's why I don't actually, I mean, it's a good way to get capital, but I don't like it when it's rule based like that. I mean, they can change the rules anytime and just notify you, and then is what it is. But what I will do, guys, I will get a FTMO account, and then we'll start trade it here, and we'll trade it for a year, and then I'll show you guys what you can do with it. And if you can do it with an FTMO account, you should quite easily be able to do it with a futures account. I think the biggest problem with prop firms, with people who trades, most people look at a prop firm and say, okay, well, they got a special 90% discount or something. I can take the trade. If I lose it, I can buy another one for $20 or whatever it is, and then do some crazy stuff when you trade. The bottom line is you got to take a funded account and say, although you know you can buy another one, but you got to say to yourself, this is plan A, B, C, D, and E. This must work. And I need to stick to the rules as best as I can. And if it's double the account over 12 months, that's fine. You don't have to double the account in a week. Just gradually build up to it, chip away, and day by day, and be consistent. Because I promise you, if you can do that and you can hold on to that account for a long time and take small payouts consistently, then you can take any amount. Then you can take a $1 million account and take money out. Nothing stops you then. Okay, so I'm just managing my risk a bit here, just in case we want to go back up, because we stuck in this range, and I don't know if we want to break through it now. Maybe we do and then come back. So if we do, great. But yeah, I'm just moving my stop there for now. Right, we need to close below this to make that a secure stop. Can't pin like this, because then it means we could come back up there. Okay, let's hope it melts down and not grow some legs. So I'll show you guys what I'm looking at, why I'm cautious here. So this was the 30 open, that's the low, that's the high. It's this one here. That high to that low. This is the first 15 minutes high and low. Everybody who trades the ARB strategy is, obviously some people take random breakouts. They would have been trapped there. Come down, breakout, enter, enter, break, enter, pull back. People get stopped here. And now it's breaking, but it's not breaking and follow through. So it's almost like it's trapping people because it wants to go up again. Yeah, so this is me just, I don't trade the ARB strategy, but I use it sometimes because a lot of people are trading it. So that's why it's important for this candles to close below this breaker structure here, because this could now easily come back all the way to the top here. I mean, I would have put a stop right here if we were closing below there. But let's wait and see. So this high is not protected. This high up here is protected. So your stop should actually be there. But I'm not going to keep my stop that wide. This break in structure now sits there. Okay, let's see if this fair value gap holds price. This little gap here is the one that should hold price actually. This one. I see it's consolidating here. It's trapping people. People put their stops at random places here. They get stopped. Yeah, just have to wait and see now. Like we said, trading's a process, so it should not be making you mad, making you anxious, making you stressed. I know this thing, because you look at it, it's like going up and down. It's seesawing with your emotions. And you should find a way to say, all right, that's my focus point, that's my other focus point. What happens here doesn't matter. If I'm staring and stressing at this screen, the more I stress, the more I get anxious. That's not going to prevent the market from hitting your stop. If it's going to hit your stop, it's going to hit your stop. So you got to try to find that mind shift that if it happens, it happens. I mean, if this thing melt down now, great. But if it wants to turn around, the market can do that as well. So, and nothing you can do. The only thing you can do is not put a trade on. That's it. Or take a profit now. The problem is every time you see money like this, you take a profit, and this thing runs for us to get, I don't know, what was it, 14,000. I don't say that's where we're going to go here. But I'm saying that's what you can miss out if you're just going to randomly take trades every time. Our close trades, and not let it be, let it play out. I mean, I've traded this system for a long time. There's times it just don't work. but then most of the times it works. So as long as we just need to close below here, then I can reduce my risk further. Okay. So now the risk is getting managed, which is great. Now this is the safety point. So we shouldn't see price come back there. If price come back there, then we're obviously wrong. So, but we want to target at least this area here. Gosh, how long have I been trading? I've been trading for more than a decade. 14 years, I think it is. And I've tried everything. It took me 6 years before I found ICT. So I wish I had found him earlier. And but ICT alone wasn't the thing that made me profitable. ICT taught me a lot of things how market book. I'm not using all of them. I've picked the one things that I can read quite easily and keep it simple. If you're going to go through ICT, it can become very daunting and complicated. And there was a lot of times when I learned ICT that I wanted to just quit trading because it just seemed impossible. And I met another guy, Steve Mauro, beat the market maker method, and that guy has a way of teaching that was so simple and so easy to see. I'm not using his method here, but there's some stuff that he taught me that I can resonate with. I can see it easily, and I'm using that mixed with ICT. And then I've read obviously Tom Hogarth, his book on how he managed risk, and I've put it all together, come up with a simple way of trading, because ultimately simpler is better. And also I'm doing trading for myself because I love it. And secondly, I want to teach my kids, but therefore I need something that's very simple to understand. So maybe if things are complicated now, you guys are the best people to tell me, and I can try to simplify it as best as I can. Hopefully what we're doing, how we're managing it, is somewhat simple, but yeah, so that's my story. That's a short story for 14 years. But I can tell you one thing, I've paid my school fees. I've tried every course on the block. I've been scammed. I've been everything. And yeah, I would say it was worth it. Not to spend all that money, but it made me where I'm at today. And everybody tells you to journal, backtest, all of that stuff. Let me tell you one thing. If you want to control your emotions, you need to backtest something that you can see in a live market. Once you see it in a live market, not after the fact, you must see it develop live in the market in front of you. And you backtest that specific thing. When does it work? When does it not work? When does it maybe work? If you're comfortable with that, I mean, I promise you, even if I give you $10 million, you'll put the trade on because you will trust that process. And it's not about the money, it's about the process. And yeah, those are the things that turn things around for me. Right, so we want to see this gets broken down here. Protected high swing point. So we would mark this fair value gap out here. So we could bounce in that area. And this area here, guys, is lining up with the bottom end of the orb range. So people got trapped here, got nervous up here, and maybe people thought, oh gosh, we're going the opposite, close at losses, we broke through now. This could very easily test there and then run lower. But if it comes back into the range, then I would just take my money and go, and we might be ranging and only later today make some sort of a move. But for now, it looks like we're good. Let me know in the chat, how long have you been trading? And if you're profitable, break even, or where you're at. The other thing, guys, on this account that I'm trading here, it's obviously a paper trade account, all of that stuff. But what I'm showing here is the same trade I would have, obviously taken a real account. Doesn't matter. It still works. What I wanted to say is this is a 50K account, and you'll see I will never risk more than 2 minis. It will be 1 mini or 2. And I think that's what your prop firms allow you to do as well. Okay, so we've got 3 years journey, still learning. That's good. I mean, if you take payouts, you're doing well already. Obviously, just a bit of fine tuning on the discipline there. I think discipline is one thing that everybody can I mean, there's always going to be that one time when or more than one time that you take a trade and you don't stick to the rules, or you do something dumb and you pay the price for that. Okay, so when do you trade your own account? I trade my own account. I mean, sometimes when I'm here, obviously not showing it, I've got a different screen, so I can enter the same trade on that side as well. But FOMC week, no trading on live money. All right, consistency is key. Okay, so if there's anything specific you guys want me to go through while we wait for a trade to play out, yeah, let me know, and then we can obviously talk through it. Like I said, not to belabor the point, risk management is something that I've refined, and the way I'm doing it now is I won't change it for anything else, and that's the one thing that helped me through consistency and help me with that risk management aspect. All right, so if we can get this low or this candle now to close below here, this high is taken out this high here. Only problem is we haven't reached into this fair value gap. Then I would obviously put my stop to break even here and then still target these equal lows down here. Unfortunately, I don't trade London. I used to when I traded currencies. I started off with currencies, and but now I'm off currencies for a while now. I only do Nasdaq. I mean, some days I look at London and there's a perfect setup. I just don't trade it. And yeah, I think I get better moves in New York. Sometimes the setups move to later in New York or London and Asia session. Then I miss those. Then it's fine. But I would still, go back and go through it, follow my process, and see would it have worked, would it not have worked. All right, so now we're going to look like we want to break here, not pin through it. We must close through it like that. Okay, so now our stop is at break even, so no risk on the table. And the protected low is, protected high, sorry, is now there. I'm going to come, let's bring this risk, this up here. Let's put it at 5 grand there. And see, I just want to jump to a 10-minute quickly, just from a risk management perspective. Okay, remember I said the way Tom Hogarth does it. Say he entered here where we entered. So he would put his stop above the high of the 10-minute candle. The next candle breaks through, close lower. He moves his stop to that high. This candle, if it closed lower, he moves his stop to that high. So he just trailed the highs on the 10-minute candles and he doesn't put a stop like this. He just keeps going till he gets stopped out. And sometimes he catches this long trade, and that's how he manages risk and obviously take money off the table. Obviously, he does it in his own way, but that was in short what I got from, listening to him. Okay, let's see if we create a swing point here. Yep. Just leaving it above that fair value gap there. Right, so I'm entering 4 months, trading my own money with cash account, profitable, using prop firms, learning futures, till I'll find a day where I enter without having A+ setups. Okay, good. Do you have strategy? I haven't made a full detailed video of the strategy. I've made some shorts on the core strategy, but I can take you guys through it. Let's see if we got it here. So basically what it is the way it's, there's no setup here, but basically what it is, I will look for liquidity. Say, let's just use this. Say this swing point here is liquidity. I'll look at the equal highs and equal lows and stuff like that. And then I want to see the market aggressively run through it. And the reason behind that is when it runs through it aggressively, people think it's a breakout, we're missing the move, and they buy the trade. Then I want to see the next candle aggressively shifts away from it. But in that shift, like this big shift here, break structure. Once it breaks structure, I'm going to look for from the high where it broke structure to the low, where's 50% of that? If 50% is here, I'll look for a fair value gap right above that, and that's where I would enter or look for my entries. And then I take the trade, put my stop above the candle that generated or made that shift and fair value gap, and then I will trade it down to the opposite liquidity. I mean, that's in short now the strategy. That's just to enter the trade. Then you got to manage your trade, like I'm managing it at this point in time. And yeah, so entry must be good. So you need to find a good entry, and then you just got to manage it. And then you'll have your targets. So you either can have a fixed target, or you can keep managing the trade till you get stopped out. Right, so we want to see price breakthrough here. Okay, so let's move that into that high. Yeah, I'll leave it at 1,000, it's fine. If we break through this, so if you look at this, this is a example of the strategy. So price has formed a swing high here and a swing high here. This is fairly seen equal highs. Then we get aggressive move up into there, an aggressive spike down, and this black candles shifting down break all the structure. Then you mark out the high and the low, and then price came back into 50%, above 50%. There's your fair value gap. This is where you enter. Gosh. And then you have two options. You either put your stop at this protected high or above this candle, this black candle's high that initiated this push and this fair value gap. So that's an A plus on its own right there. And this is obviously A plus in continuation. Hope that makes sense. Obviously, if you entered here, this is what your target would look like, would be down here. So your trade would look like this. There. And that's all you need, guys. 2 to 1. That's a 3 to 1 trade. Just this entry here. I mean, we've been trading from here, but if you don't see anything clearly, you don't have to take a trade. Just wait for the market to aggressively break it. This one didn't pull all the way up here. If this pulled up into this fair value gap, that would have been super A plus. So I think this high would be protected here. I think we're just going sideways a bit here, but we'll break through now. Guys, if you find value in this, obviously live streams, don't forget to give me a thumbs up or like on this video. It helps a lot. But yeah, obviously if you don't, then you don't have to. So this high is not protected yet because we haven't closed. We spiked through this breaker structures, but we haven't closed through it. So that forms a new swing point. So that's the new breaker structure we need to close through to create a new protected, protected swing point. So far we're still protected up here. Of course, we broke through these pretty solidly. Yes, it's very close to the ICT 2022, I think, model. Only thing I don't do is I don't look for order blocks and breakers and all of that. I just keep it simple. Fair value gaps, that's the one strategy. The other one's the IFVGs, inverted fair value gaps. And yeah, I've got three strategies. I've got a scalping strategy as well, which I won't share here because that's just going to confuse everybody. Come on, give us the breakdown. Okay, so that's a break in structure now. So in theory, this should be the next protected high. Okay, so I'm going to leave that there. The other thing about profitable trading is once you entered at a good entry and you find new entries, that's where people add to their entries. And obviously, as long as you manage your risk to break even, you can add new risk on the table and then bring it down. Let's see this one. Alright, so we need to break through this low. Once I brought my risk down, I would never put it back there. If something looks like it wants to do something, if it stops me out here, then it's fine, I'm out. Even if this thing goes down to a $14,000 mark, that's besides the point. This is the decision, this is the process, this is what I need to stick to, this is the rule. Yeah, you can say this is a continuation model because we're already trending down here. So then you can look for continuation setups like this: liquidity, shift, structure, fair value gap, enter, and then target the next liquidity down there. And then the same thing applies for a reversal when you get to a level like this, and it gives you an opportunity or run liquidity, shift away, fair value gap, break of structure, come and test, and then go higher. Then that would obviously be the reversal. If we close above this protected high, then we're most probably going to want to go to this levels up here. And then you have a choice. You can either just collapse the trade or wait for it to stop you out. And see, that's 50% right there. If we break above here and there, we're going to want to come to this fair value gap up here. So now I'm watching this level here. And then what I normally do is I'll take the trade off manually before it gets there. It all depends on how this closes here. Okay, wait, there's a reaction. Okay, so now I want to see price move lower here. So you got to move this to this low. Oh, gosh. This high here. Because that can't be protected. We've violated it. And I might just put my stop there, so it's fine. Because if it wants to go higher, yeah. Forms a swing high there. So this candle might move lower here. Just remember the talking about a green candle looks spooky. Trading is obviously a psychological game. This is enough to tell people or make people think we're going up maybe. That candle, when we break through that, there's breakout traders that will switch positions here and then get stuck in their trade. They might be right. I mean, we might run up the page here. The IFVGs is my other model. I don't trade it on the live stream that much. If I see it, we'll trade it. I like this way of trading more because it's easy to explain and it makes sense. I feel it makes more sense to explain to people as well. Okay, so this account we on 18,000. So we took 1,400. We lost 400, so we only made up 1,000 for the day. Okay, so now we have to move that thing up there. Probably still run down. Just had to stop me out first. And I think the most important thing is trading doesn't move in a straight line. So right, good question. How do I know which swing point is the swing point to follow and which ones is a noise? So I think we had a very good example yesterday with that consolidation. So if I look at this, we formed a swing point here. We've had a swing point here. We had a swing point here, but nothing was breaking. If that happens, I mean, you just have to first wait and see how price reacts around it. Okay, so it ran break structure there, but not this one. They too close, so that's like liquidity to me. And then we get the shift through this one and that one. That's strong. I would now wait for price to come back. I'll take a trade and then I'll mark out the swing point, the lowest swing point that formed, this pullback. I mean, this swing point now, taking that out, so it's lower than this one. So I'll use that swing point. But because we haven't closed through any of these swing points yet, I can't make this a protected high. This swing point here is still protected, but we only broke through this. So there's this one here, there's this one here, that one, but this one still overrides these two because these are lower than this one. And we haven't broken this or this one yet. We did break it here, but then, I mean, it makes no point to put your stop up here. I'm looking at, you know, this value, this range. That's the value area there. So that's where smart money sold. Smart money is not going to put their stops there. People get wrecked here if you take the range in the bottom end in a discount, trying to sell at a discount. So, and I think it comes with, you know, the more you do it, the more it will resonate. But yeah, so you'll see, I won't just use any swing point. I don't know if that explanation helped in any way, but I'm trying to filter out which one is important and which one is just hovering around within that range. So this is important, that becomes important, that's important, but now it's no longer important because we're violating to the upside. And we close through on it. That's the other important thing. I wouldn't, the reason I wouldn't buy this fair value gap that gets inversed, because we've got another fair value gap here, we've got one here, there's a bunch of them here, and there's liquidity down here. So if you buy here, where are you going to buy? Up here. You might get sent down from there again, because now you're stuck between two fair value gaps. So I then jump to a higher time frame. So I would go 15 minutes and then say, all right, guys, where are we? Then I will mark out the high, the low, and this is where we are. Well, this is where we are, but that's, so if a smart money trader want to sell this thing, he's not going to sell, he's not going to sell below this green line. He's going to sell above the green line. And there's no fair value gap here. So most probably up here, the green line, we can mark it and see if there's anything there on the 1 minute. So it's up here. So remember, we marked out this fair value gap, and the only reason I'm saying we're going to bounce from this one is this high aggressively violated and close below that swing low. So this is protected. This is in a premium zone already. I mean, if we really want to go all the way there, that's a big premium. But then we've got these two highs here, which could potentially be liquidity for this to run into this fair value gap. I mean, I don't want to confuse you, but we've got this little gap that was inverse there, and ICT teach you that if you inverse like that, break structure and come back to test it. Remember, this little fair value gap here, this is where I originally wanted to enter. But price never got there. Price might get there now, because that will be in the right premium to sell from, and then probably send price down. So this yellow line here, that would have been the A+ setup for run liquidity, break structure. I mean, there's an entry up there, but a bigger break structure here, and then the pullback these two swing points here, that's liquidity. And yeah, so this could well easily go up all the way to there and then sell all the way down to this fair value equal lows down here. So I'm going to stick around and see if we're actually going to get there. And let's do, this is the first fair value gap though. Let's leave it there. I just want to see something here. The reason this entry here ran liquidity and sold off, break structure, formed a fair value gap. This fair value gap is below 50%. So if it was above 50%, we could have taken a trade up there. Then it would have been a reversal A+ setup. The other thing is with IFVG, for me to qualify a good IFVG, the candle that forms the fair value gap, it needs to be inverted within 4 to 5 candles. So in this case, 1, 2, 3, 4. So this little gap here was a good IFVG. So you could have, you know, sold here, but that's a little one. Then you've got another one here. So you could have sold here as a IFVG trade and target these lows. But I didn't take it. So just to update this, that was protected there. I want to see structure break up there. Then we most probably going to go up there. But we need to close above that swing point, not spike like that. Just to show. Okay, so these two swing points here is the liquidity. So I'm expecting price to run up into that. I mean, there's a little fair value gap here. Hopefully we form like a swing point here and run up. Okay, so I'm at break even in that trade. want to see it push higher. Come on. You can do it. I know you can. Bounce, bounce, bounce. Or not. Okay. That's fine. So obviously there's equal highs here now. I still think it's going to go higher, yeah. But I'm not going to enter again. Okay, so there's a little swing there. Because this can now leave equal highs here and then drop from here. Or this is just a liquidity grab and then go higher from there. Take a buyer. Let's see. Just take this up there. See if we can squeeze 800 bucks out of this. Don't want to see this happen. You want that structure up there to grab liquidity there. If you look at this, there's a little swing there. That took liquidity, shift away. Now let's see if we can hold that position. Take us to the top. Take us to the top. I'm going to be unlucky if I get stopped out here again. Come on, reject and bounce. Reject and bounce. Take us up. Just take it to the high. Come on, you can do it. No, you can do it. Up, up, up. Test and bounce, test and bounce. Let's see what she wants to do. Push, push, push. See, we've marked a high and low, now we're stuck in here. I mean, if we really wanted to go lower, we want to see this go higher first and then come down. But like I said, price can do whatever it wants. Come on. No, it's probably going to tap us out here. Let's see. Okay, I'm out of that trade. That's fine. So this is what high resistance liquidity looks like, guys. We print equal highs, but we don't want to get there. We print equal lows, but we don't get there. But we will get there today. It's just, you know, taking you through stupid emotions. In this situation, someone asked earlier, so I won't use this swing low, swing high here as the new break of structure. That's the high. It would be good to see it break there, then I can expect it to get there. But y'all see this candle rejects this high, low, and this low here. And this is your typical consolidation, manipulation, and hopefully now expansion to the upside. Still in this fair value gap though. Because we ran this low and this low, that's a swing point, that's equal lows, ran it. And it comes from consolidation. This should go to where we want it to go. Or maybe not. This is not a protected low yet. I need to see a big candle break something, yeah. Close above it. The structure is not right, it's this one, yeah. All right, I think I'm going to call it a day because I'm seeing you guys back here at PM session. So, yeah, thanks for everybody that's joined. Let's look at the 15-minute quickly. I just want to take this off. See, these are almost equal. But yeah, I do think if you really look at this, no, this will all come back on now. So we add that 50%, that line that we drew there. So could be some short setting up, but if I want to take a short, I want it to run these liquidity up here. That would give me a narrative to say, all right, spike in there, create all the right scenarios, and then take it down to this level. But obviously price is starting for maybe later, I don't know. And it's one of those things. All right, but I'm going to jump off. I'll see you guys at the PM session. I'll look at this later to see how it all played out. And maybe we get a better entry or better setup there as well. So thanks for your support. Thanks for all the likes, the thumbs up. Thanks for the engagement. And yeah, I'll chat to you guys a bit later. Take care. Bye-bye.